86% of the currency in circulation was cancelled. The goal? To deal a financial blow to the black economy. A year later, was it all worth it? Watch the demonetization experiment on the 8th of November with Dugal, only on BloombergQuint.
Thanks for joining us on Power Lunch. This is BloombergQuint. I'm Harsha Subramaniam.
Good afternoon. I'm Dugal. Let's get straight to the headlines this afternoon. Markets trading in a narrow range, the Nifty hovering around the 10,350 mark.
Bharti Airtel is the top Nifty loser today after Qatar Foundation sells around 4% stake in multiple blocks.
Arvind board approves the demerger of the branded apparel and engineering businesses. The demerger will help individual businesses chart their own growth stories, says Chairman Sanjay Lalbhai.
Gold imports may have dropped 31% in October. Bloomberg News reports that an inventory pile-up may have led to this fall.
Voices on the show. We'll bring you a clip of a conversation with Manishi Ray Chaudhary of BNP Paribas. He seems to remain bullish on India despite stretched valuations. We talk rupee and bonds with Anand Bagri of RBL Bank, and we get Vijay Shekhar Sharma to comment on India's attempt to go cashless a year after demonetization was announced. All right, but as always, let's dip into the markets and see how things are shaping up. Fairly flat day on the indices. Niraj Shah joining us as always. Niraj.
Yeah, it's flat. See, for a currency trader, there is a range, but otherwise there is no range. It's 0.1% plus minus, so hardly anything happening on the bourses. But volatility is high. I think the India VIX is up in today's session as well, if I'm not wrong, 3.5% higher after a big move in trade yesterday. So that's something you need to keep in mind, that while the index may be very, very flat, India VIX is certainly higher. What's moving within the individual components? Well, oil and gas, IT, to an extent select pharma names are all active, but the stocks will come up on your screen. There's some bit of long pile up that we're seeing in IT. So Tech Mahindra, TCS, a clutch of mid-cap IT names, the likes of Emphasis, Nucleus Software, etc. And there are some fresh long positions that are being added here. So that's one very interesting pocket. What's also correct, on the flip side, what's really correcting in the session today are the downstream companies, the oil marketing companies that is, and Reliance, which continues to go down. I think it's lost quite a bit of market cap over the last one odd week, and in today's session is no different. It continues to correct down a couple of percentage points. There were a few individual pockets which stand out. One is that the PSU rally seems to have taken a bit of a pause. So the MMTCs, STCs, Hindustan Coppers of the world, after having a blowout rally the last few days, are correcting a bit in the session today. So do watch out for those names as well. I just want to make a special mention of one stock, and that is Arvind. Maybe the news is out of the bag, and therefore any kind of long positions that would have been there in the stock have corrected, but the stock is down 6.5%, or maybe the market is genuinely just not being able to figure out how attractive would this scheme of arrangement be that Arvind has given out. So that stock, post the news, is down and out, 7%, trading at the lowest point of the day.
All right, thanks so much for that, Niraj. We've just got Arvind numbers flashing on our screen, just briefly mentioning those. Ashok Leland, apologies. Their numbers on the screen. Let's bring them up. 334 crore versus 294 crore is the year-on-year comparison. The stock seems to be trading a little bit lower. Perhaps the numbers are a touch below expectation, just mildly from the look of things. But let's get back to the broader markets. Harsha standing by. Harsha, it is 1 year since demonetization, and we're all trying to look back and see where things have gone from here. Okay, do we need to go to Ashok Leland and get more details on that? All right, Yatin is not there yet. So let me go back to Harsha. Harsha, apologies for that back and forth, but would love to know how markets have been shaping up since demonetization. I know the day after last year, there was a fair amount of panic.
Okay, so this is a known story. I'm just showing you the Sensex chart. This is courtesy Ravil Shirodkar from Bloomberg News, who's put this out. Take a look at what has happened in the last 2 years, and this is the journey of the Sensex over the last 2 years. 16.5% fall in the Sensex. This is for a time period somewhere around October of 2015 till about February of 2016 era. There was 16.5% fall. And then the market got back onto its course. It was a steady rise, and it went all the way to around September of 2016. That's when, if you recall, some shakiness came back into the market, and you saw a fall of about 11%. And around this time was the cash ban was announced same time last year, and there was a correction of only about for 10 days. After which the rally resumed, and for the last 1 year, exactly for a year, this has been a steady rise in the Sensex and across the board, revealing two things. One is that this has risen to become the second best performer in Asia for the Sensex, and second, there's been a clear shift in household savings to financial assets, and this sort of reflects the point that we've been reiterating over and over again about how the mutual fund money has added to the liquidity or fueled this liquidity, therefore taking the markets up. We're not asking for one, we're merely presenting the case as is. It's been 1 year since we've seen any meaningful correction of sorts.
All right, Harsha, thanks so much. And we will talk a little bit more about that domestic liquidity surge in a bit. But now I think we can go across to Ashok Leland. Yatin is ready. Yatin, what do you have on the numbers?
Well, Ira, if you look at the numbers, they're slightly below the street expectations. In fact, if you look at the revenues, they have come in at 6,050 crores. Of course, there is 30% growth there, but missing the estimates by almost 100 crores. As far as the absolute EBITDA is concerned, we were expecting an EBITDA number of 680 crores, but the company has delivered, a EBITDA of close to 611 crores, which means that they have delivered a margin number of 10.1% versus our expectations of 11%. So almost a 10% kind of a miss coming in as far as the operating performance is concerned, and probably that is translating into a profit miss as well, which is coming at 334 crores versus the Bloomberg poll of 385 crores. Of course, on a year-on-year basis, it's a nice 28-30% kind of a growth rate, but clearly on the operating front, we have seen some pressure coming in for Ashok Leland.
All right, thanks so much for that. That's Ashok Leland. I am going to go back to the markets, though, and talk a little bit about the broader picture once again. Domestic liquidity continuing to drive the Indian markets. You can keep talking about the fact that valuations are stretched, but Manishi Ray Chaudhary of BNP Paribas Securities, who spoke to BloombergQuint earlier today, says that there has been a structural shift in terms of financial savings, exactly what Harsha was talking about, and perhaps that will continue to sustain markets even at these levels.
We have seen about 15% increase in consensus earnings estimates of Asia ex-Japan, but driven mostly by the North Asian markets, Korea, China, Taiwan. India, on the other hand, has seen a drifting down of the consensus earnings estimates. It's only over past 1 month or so that we have seen a small uptick in these consensus estimates. So, in that sense, India may look a bit stretched, particularly in terms of the valuations, and especially because it's the third best performing market in Asia this year, right? So I think to be really bullish on India, to kind of renew our bullishness, we will possibly need to see a sustainable trend in these earnings improvements that we've seen. That said, there are some positive indicators, just as I said, that over past 1 month in this particular season, we have seen better numbers than most people anticipated. We will have to watch out whether that's likely to remain sustainable or not. Indian retailers routinely used to put 15 to 20% of their financial savings into equities. They got burned by the successive scandals in mid and late 90s, and then they withdrew. That confidence is just about building up again. So we are actually very positive, not just in India but across Asia, about this phenomenon of domestic money coming back into risk assets, and I think this is likely to continue.
Okay, that's Manishi Ray Chaudhary talking about the markets. Talk about the rupee now. The rupee slipped further in morning trade, moving towards its 200-day moving average. A break of those levels could prompt some further technical weakness in the currency, it seems. But the technicals aside, the rupee's weakness coincides with an increase in oil prices. Now, take a look at this chart. If you look at the long-term chart of the Indian currency versus Brent, you can tell that there is a correlation between the Indian currency and crude is not always a one-on-one. It's not a direct one. The movement in the rupee is often dictated by other factors, other international factors, that is. In the current scenario, for instance, if gold imports was to come off steeply, that could help reduce some of those pressure coming in from higher oil prices. That's what this chart denotes. You want to comment on this, Zira?
No, just that yes, oil is rising, that puts pressure on the rupee, but not exclusive of all the other factors, whether domestically or internationally. I think we'll welcome in Anand Bagri to help us analyze the currency and also the bond markets. He's the domestic markets head at RBL Bank. Anand, thanks so much for taking our call. First on the currency, what is your view?
Thank you for calling me.
Anand, what's your view on the rupee right now in particular?
Rupee, possibly, I think rupee, we should expect further weakness in rupee, maybe another 20-30 paise. That's basically coming because of the oil demand. But as you had also rightly said, possibly it should not lead to a long-term weakness in rupee, but I think it should remain range-bound in the current range of around 64.50 to 65.50 is what we expect.
What do you think are the pulls and pressure in the near term, Anand? You know, on one hand, you mentioned about oil prices. What are the pulls and pressure that's going on in the currency market right now?
I think the major pressure is from the oil markets only. The oil companies have a sustained demand, and we saw this demand coming over the last few days, and that's what has been pushing up rupee. Otherwise, the kind of inflows that we were seeing in the past few days, I think those inflows are currently missing in the market. So possibly these two factors are leading to this sustained demand in rupee. Otherwise, I think domestically everything else is fine. As you rightly mentioned, the gold demand, the gold imports have also come down by around 20%. So that should bode well for domestic markets for rupee in the long run. As of now, I think it's basically triggered by the short-term demand of oil companies only, and I think it should remain in a range. Over the next few days, we don't expect for maybe another 20-25 paise weakness, and after that, we expect rupee to stabilize at those levels.
Anand, just shifting focus to the bond markets as well. What is your call on yields? Are we heading back towards 7%? I think we've already obviously crossed 690, perhaps close to 692 now.
6.94%. I think we should touch the 7% mark very soon. It's basically a couple of factors which are leading to it. One is the GST rationalization also, so people expecting some revenue shortfall for the government. Apart from that, I think the various other factors like the yield curve is also steepening because people are now pressing in some growth also coming in back to the system. Plus, crude prices have been a dampener. Plus, people were very bullish on bond markets. I think that bullishness is now slowly waning. So all these factors are leading to this the steepening of the yield curve. That said and done, I think market should not go over 7% in the short term. I think we should see some demand coming back at these levels.
Is the market factoring fresh paper coming in, 10-year paper coming in, Anand? Is that what is keeping the underlying, sentiment bearish on bonds?
Yeah, the current paper would become off the run very soon, and that is why people don't want to build aggressive positions in that bond. So that is also one of the factors. And people, and wherever people are able to sell offload, possibly people are just getting out of this paper. Also, RBI has been sustainably coming out with this OMO sales of papers, which is also taking away liquidity and increasing the duration in the market. So some of these factors are possibly have coincided to take the yields up.
Anand Bagri, thank you so much indeed for joining us with your views. That's the view on the currency and the bond markets. Gold imports, meanwhile, which have elevated for much of this year, may finally slip. Bloomberg News reports that gold imports by India dropped 31% in October compared to a year ago. This may have been due to pile up on inventories of gold importers are said to have stocked up before GST came into effect, and coupled with slow domestic demand, they pushed up the inventory in the country. Gold imports in the first 10 months of this year will still be nearly double of last year despite this drop.
All right, that's the macro conversation. Let's get back to stock-specific news. Arvind Limited will be split into 3 entities, with each division housing its apparel, engineering and textile businesses. Mr. Lalbhai, who was announcing this a little while ago, said that each of these businesses are now at a position where they can chart their own growth story. Yatin Mota joining us with the details. Yatin.
Well, if you look at the entire Arvind Limited company, it has 3 businesses. One is the textile business, one is the brands business, and one is the smaller engineering business. So the broad scheme of arrangement is that Arvind Limited stays with the textile business, which is the existing listed companies. However, the company announced a scheme of arrangement wherein they will be issuing shares for Arvind Fashions and the engineering business, which is Anveshan. Now, if you look at the entire scheme of arrangement, every 135 shares of Arvind Limited, you will get 5 shares of the engineering business and 27 shares of Arvind Fashion. So basically, it's a split between the textile business, the fashions or the brands business, as well as the engineering business. Of course, since Arvind Limited will be left with the textile business, both the engineering business and the fashions business will be separately listed on the stock exchanges. Of course, the market participants believe that this is more to do with the succession planning of the company. If you look at the rationale for the transaction, the management believes that each business is unique and has its own cyclicality as well as its own investor base, and probably it's the right time to split these businesses. Probably the management will remain independent and probably focus more and have a better grip on the businesses, because engineering, brands and textile business are separate in nature. Of course, if you look at the valuation, and when I spoke to analysts, based on 25 times EV EBITDA, the fashions business, the brands business is the largest of them, having a valuation of close to 9,000 crores based on 350 crore EV EBITDA basis on a multiple of 25 times. The textile business is valued at close to 2,500 crore rupees after deducting the enterprise value with debt of close to 2,700 crores, which is there on the books. And the engineering business is close to 15-20% of the current market capitalization, valued at 800 crores. So if you look at the numbers, probably will add up to the current market capitalization based on FY19 estimates. Of course, the kind of slowdown that we have seen post GST in the engineering and the textile business is leading to lower numbers, which the management expects which will be reversed in the coming quarters.
Yathin, thank you for that. Bharti Airtel is meanwhile the biggest loser on the Nifty today. The stock has fallen 4.5% after a series of block deals in the counter. Soumit is standing by to tell us who sold, how much and at what price.
So Bharti Airtel slept the most in the last 7 months now. It is after the largest public shareholder, that is 3 Pillars, was reported to sell stake. Now 3 Pillars owns around 5% stake in the company, and they were offering these shares in the price range of 473 to 480. Now this price range was lower. The earlier price range was fixed at around 473 to 490, which was lowered to 473 to 480. Now Qatar Foundation, that is the parent company of parent group of the 3 Pillars, will be making around 1.4 times its investment in more than 4 years. Now they acquired stake in Bharti Airtel in 2013, and they acquired stake in around 340 rupees per share. Now so far in the day, 7 block deals have happened, 7 block deals and 17 crore shares have changed hands in the price range of around 491 to 495. We are still not sure whether these were related to the 3 Pillars or not, and who's the acquirer of the same.
All right, thanks for that, Soumit. That's Bharti Airtel, the stock's trading week. A couple of pharma companies in the headlines as well. Sun Pharma's subsidiary Taro reported earnings above expectations. Lupin, meantime, is in damage control mode after the US pharma watchdog issued a warning letter on 2 of its plants. Darshan Mehta is standing by. Darshan, let's start with Taro and the numbers there.
See, the numbers are strong. Taro is the Israeli subsidiary of Sun Pharma. It contributes almost 20% to the top line of Sun Pharma. So, strong set of numbers on a year-on-year basis. If you're looking at it, the numbers looks rather weak, but they have come in ahead of what the street was anticipated, and there has been a substantial growth even on a year-on-year basis. So, if you're looking at it, much ahead, a $10 million beat on the bottom line, margins coming in at almost 52% versus the estimate of almost 49%. So, strong set of numbers from them. They have said that there is increased competition, there is increased price issues, but still despite that they have managed to have volume growth. Credit Suisse has come out with a note, and they believe that the second half will be much better for them, and they believe that the pricing issues have bottomed out for Taro at this point of time. For Lupin, the news came out yesterday of a warning letter. It was more of a shocker for them also. So post the marketers, they came out with a conference call, and in the conference call they believe that there are no data integrity issues in the warning letter. We haven't seen that letter because that will get probably uploaded next week. The other things that they have said is that there were 2 issues that the US FDA refused to accept their reply. First of all was the out of specification issue, and the second was basically hold time studies that they did. And for the hold time studies, they want a retrospective examination for that to happen. So now Lupin will have to go back to the FDA to understand how long before they will have to go as far as this retrospective inspection is concerned. But in all, 50 products will be impacted for Lupin for these 2 plants, out of which if you look at it, some of in the near term, whichever products were there, they've identified close to 25, and out of this, the 12 most important products or so, they won't want to ship out to other plants so that the earning pipeline does not get impacted. Now this clearly means that currently there's no issue for them because all these products currently they can, but the future earnings will be severely impacted for Lupin given the fact this warning letter has come in.
Darshan, thank you for that. 1 year ago, on this day, Prime Minister Modi announced an unprecedented move. 86% of the currency in circulation would be no longer valid. This sent shockwaves across the economy and the banking system. While some pockets of the financial sector reap benefits, we caught up with arguably the largest beneficiary of them all, Paytm. Menaka Niraj asked the founder of Paytm, Vijay Shekhar Sharma, whether the digital wallet to payment bank will be able to maintain its growth momentum and achieve its lofty goals. Listen in.
We believe that a disproportionate amount of target setting helps team rally around those targets and achieve them. And I think we've been able to be lucky that we've not just achieved those, we've crossed those targets too. And I've been very publicly open about it that we'll be 500 million bank customers who are biometrically verified and confirmed by 2020.
So this is not conservative. This is not lofty, really. You presume this is something that is very realistic for you.
Yeah, that's right. No way.
Okay.
I mean, we'll be the largest bank by the customer base in this country.
Okay.
That's for sure.
Okay.
That's our ambition. We want to be like a certain percentage of population in the market.
Yeah, Vijay, where are you on the payment bank numbers? I think you had said that you were going to set up 31 branches, 33 controlling offices, 3,000 access points. How many customers do you have for the payment bank now? Can you give us a sense of what the scale is of the bank?
Yeah, I think my CEO talked a few days back and she was telling that we are in tens of million customers number, and the official number, we want to keep it for the day when we launch with checking account, saving account also, so that we can share that number. So that's a very healthy number, number one. And number two is about the number of banking points. So branch, ultra low cost branch, control points, and our Paytm ka ATM points. Right now we've sent RBI requests of 100,000 banking points in the country. So when we formally are talking, the number of places where customers can walk in, deposit cash, take cash, and do the banking is headed towards 100,000 in the first year itself.
Vijay, if I may, the favorite question that almost everybody has for all high growth companies is what about the funding requirements, and how many rounds of fundings and at what valuations would you envisage doing them? I know you can't give specific numbers, but any thoughts thereof?
Vijay, can I answer this question for you?
You can try, yes.
Yeah.
I'm going to do it in Hindi film style, Vijay. I'm going to roll up my sleeve. You can't see this. You can't see this, but I'm going to roll up my sleeve and say to Niraj, "Mere paas Ali Baba hai."
नहीं, मेरे पास माँ है.
Sorry, damn. You outdid me on that one.
All right. So Niraj, I think it's important to know that any high growth company, like you said, has to have capital access. I think I'm privileged that SoftBank and Alibaba and any of our shareholders are, first of all, we have few shareholders, and second, we have long-term shareholders and with long-term capital access. I think that is one of the most important aspect of whatever the plan that we're building. So there is no secret about it that we will need more capital. But as of now, when we look at our books and our availability of capital, we're totally well capitalized beyond 2020 also, with the numbers that we're talking, investments and the customer growth. That said, after 2020, we talk about after 2020.
Fascinating story of Paytm. You can catch the special show where we take stock of the economy after demonetization, the demonetization experiment 1 year on. That's coming up right after this.
Before we close off the show, brief mention of international news. US President Donald Trump is on a visit to Asia this week, addressing the South Korean Assembly during his visit there. Trump called on all responsible nations, including China and Russia, to join forces against the danger of North Korea.
All responsible nations must join forces to isolate the brutal regime of North Korea, to deny it, and any form of it, you cannot support, you cannot supply, you cannot accept. We call on every nation, including China and Russia, to fully implement UN Security Council resolutions, downgrade diplomatic relations with the regime, and sever all ties of trade and technology. It is our responsibility and our duty to confront this danger together, because the longer we wait, the greater the danger grows and the fewer the options become.
President Trump in Seoul. Well, coming up next is a special on demonetization. Keep watching.